Moving on, well, compliance is a word that has taken on new meaning recently. Ensuring that your company complies with the many regulations is not an easy task. But enterprise content management solutions can help take the sting out of the process. Nasdaq-listed FileNet provides these solutions. Let's get behind their business. Lee Roberts, he's the CEO of that company, joins me right now to look into the business. Lee, good morning to you, and thanks very much for joining us.
Thank you for having me.
Just very, very quickly for our viewers, what does your company actually do precisely?
We fundamentally help large global customers and government agencies capture and store all of the information assets that you can't traditionally put in a database system, and then help them deploy those in ways to meet either government requirements, for example, compliance, or to help automate business processes, for example, helping banks automate mortgage lending or an insurance company automate the claims processing aspects of their business.
So basically, with new regulation like Sarbanes-Oxley, for example, you can create software which is more or less a template which can be applied to your clients and your customers when they need to comply to these kind of regulations.
Correct. You know, in the United States, Sarbanes-Oxley now is being enacted in law, and it really requires CEOs like myself to certify not only the financial accuracy of the reports, but also to certify the overall processes by which we run our business. And I know there's a similar trend here in the UK issued through the Turnbull report. So what we do is we provide tools and technologies and records management solutions that make it easier for companies to get control of the information in the first place, and then to ensure that the processes that they're required to audit are actually being implemented within the company and they can stand by them.
So for you, a case like Enron really was godsend, because that gives a higher drive to your own demand, right?
Well, I think I'd prefer if it hadn't happened, but it certainly put a very high degree of focus from corporate boardrooms on the kinds of products and technologies that we deliver. And as a result, you know, our company has performed very well on what's been a very tough tech market. We've been consistently posting double-digit revenue growths in the software license area.
Now, do you actually see a bit of a difference? We speak to many CEOs, and now they're starting to see a little bit of a pickup in the IT sector. Can you actually feel that as well from your side?
It's decidedly better than it was 2 years ago. I wouldn't say we're out of the woods yet, but certainly the initial market research that we're seeing for 2004 calls for IT spending to increase towards 4 to 5%. So that's a positive, and our business grows typically 3 to 4 times faster than that rate. So we're quite optimistic about 2004 and 2005.
So, Lee, what would be for you out of the woods if you had to quantify it?
Out of the woods? I'd be seeing IT spending rates in the range of 6%, seeing our software license business growing somewhere between consistently 15 and 20%, getting our operating margins back closer to 10 to 12%.
And there's a long way yet to go. Now, with regards to distribution, where you actually do your business, Asia is something that, again, a lot of CEOs quote over and over again as a growth market. Your own share in that market is only about 4% of your total revenues.
Right.
But what about the growth?
Well, the growth rates around the world, interestingly enough, right now the highest growth rate is in Asia because it's a small market. But quite frankly, the biggest opportunity for us is here in Europe, particularly in the UK and in Germany, where there's a lot of money being spent around enterprise content and business process management solutions. So we're seeing growth rates in Europe in the range of 10 to 12%, in Asia between 15 and 17%, and we're actually doubling our business every year there right now.
Lee, consolidation in your business is a big issue there. And last time I read an interview, you actually said, no, we are not a takeover target. If anything, we are the ones buying. But looking at the way your share price has been moving, it seems that the market is believing a different story.
Well, you know, this is a space that's getting a lot of attention. Last year, about $2.5 billion was spent in this market. It's estimated that the market's going to grow to, you know, between 8 and 10 billion in the next few years. So that gets a lot of attention from companies like IBM, EMC, and Oracle. We're the market leader in the space today with about 19% of the market, and we've been growing both organically and through acquisition.
So when are you going to buy?
Well, we're going to continue to buy companies, and you know, we're acquisitive and focused on trying to become a billion-dollar company in our own right.
Okay, good. We'll see the next deals coming through. Thanks very much indeed. Lee Roberts, he's the CEO of